Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything that you need to start your trading day.
Good morning, everybody. Hope everyone had a good weekend. Welcome to this Monday morning edition of Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. On the show today, we are joined by Jerremy Newsome. He is the CEO of Real Life Trading. He'll join us at 8:35 to go over his trades that he's watching heading into this week. As far as news, though, we've got some news on Honeywell. We've got some news on Tesla. We've got some news on Walmart. And a lot of ratings to discuss. Joel, what's doing in the market? And how was your weekend?
How was my weekend?
How
was my weekend?
How was your weekend?
Let's talk about the S&Ps. Let's talk about the S&P futures. They're trading up 475 here.
He doesn't want to mention the game.
Yeah, he doesn't want to mention the game.
We know that just to let you know, he's actually not in he's actually in a bad mood for a good reason.
Okay. We opened up at 43 and a quarter. That was the low tick of the session. New all-time high, 50.50, folks. So that's your target. Actually, Thursday's high was 50.75. So looking for continued upside above that level. Crude, flat. Let's just call it flat, down 3 cents at 49.26. Gold up 10.5 bucks. Nice move in the gold market today. And silver up 17 cents as well. Good morning to you, Dennis. How you doing on this Columbus Day trading session?
Thanksgiving Day in Canada. So Thanksgiving Day in Canada. Happy Thanksgiving to all our Canadian listeners out there. If you're up here listening this morning, or maybe you're sleeping in on your Thanksgiving Day off. The typical thing this morning, we're seeing S&P futures rally. Obviously, we were not typical on Friday because we actually did end up closing down. So I would have lost that bet with you, Joel, if you would have made it with me. I said heads the market wins, tails the market wins. I predicted that the market would close higher on Friday. It did not.
No.
Prediction did not come to fruition.
No, but it was too deep in the red. You went by the time the number came out and everything.
I was in the hole too much.
Yeah,
I would have wanted odds.
But I just have one quick question. So do you guys do the turkey and everything today?
Oh, yeah. This is the full Thanksgiving Day for Canada.
Really?
Yeah, this is it. Canada has the Thanksgiving on the well, actually we did the turkey thing really on the Sunday. Most people celebrate like the Sunday night because the Monday's for your day off, and I obviously don't get a day off. So we did our turkey dinner there last Sunday night.
Okay. All right. Well, let's get moving. I mean, even though it's the banks and the bonds are closed today, doesn't mean the market can't make a new all-time high.
There are some moves. There's some individual stock moves here. The stock that's moving the most, this happened Friday night. You really saw Tesla start to take a hit. And obviously it's continued here this morning. And Spencer, give us the details. Looks like a delay.
We do have a delay. The launch of their big rig truck will be delayed until mid-November.
And that's the reason stocks trade down significantly. Barclays came out with a negative note again this morning, just citing the delay. I don't have the note sitting in front of me. Not sure if you have it there, Spencer, if you wanted to dig. But Tesla's trading down $5.50 here this morning, down 1.47%. I don't know. Like technically, let's just forget about the delay. Delays happen. And we know, when you look at this thing from a valuation perspective, it's difficult to really get behind it. But when you look at it, things stayed technically, a lot here as well. Joel, tell us about the technicals.
Yeah.
What are you seeing set up in Tesla? I mean, GM has been a monster. They've kind of been eating Tesla's lunch up till a few days ago, and Tesla had a reprieve rally, and it's kind of, come up quite a bit since then. What are your thoughts here on TSLA?
We hit a new all-time high, and then we came off hard. I'm just looking at a big psych level, 350 here. The lows over the last three sessions, 49.60, 51.35, and then 52 and a quarter on Friday. So, we got to round this off in this for a higher price stock. So 350 holds. I think you got a chance to rally. Under 350, it definitely got some work to do on the downside here. As you could see, you went from 330 basically to 350 in 2 trading sessions. So I don't know. And the other thing too, a driverless rig, a driverless truck. Do you think you'd want to be on the road with one of those things?
I don't know, but I will say I was driving back from Ann Arbor on Saturday night, and it was raining really bad. And I was thinking to myself, man, and it was a really bad drive. And I was thinking, man, it would have been a really nice day if I had a self-driving car right now, and I didn't have to drive because it was a really bad drive. So I would do that in terrible weather when it's bad driving.
I mean, those self-driving trucks and cars are going to probably be more efficient eventually than humans, right? Like they're going to have, the technology at a point where, they won't get in accidents, I would hope. The scary thing is as the technology is trying to get there, and you're just starting off, all of a sudden you got a self-driving semi coming down the road, or you got a self-driving car even coming down the road. You wonder if they've got everything perfected, because when technology is, if there's a hiccup or there's something in there, you could get in an accident. So it's like getting from point A to point B in the technology to get us to a driverless car that isn't going to get in an accident.
That's part of Gene's thesis, is if I had that safety, that eventually
it's the biggest thing. I mean, all it would take is, one of these driverless cars, all of a sudden, would get in a major accident, and then everybody would, government regulation would be coming in harder. Everything would happen. So there's a lot to think about from us to get to point A to point B, but I think we eventually get there. And I think, 20 years from now, you're going to have a lot of driverless cars on the road. So I agree with Gene here. And it's just a matter of, what does that mean? I know, like Gene has said before, and, other people have said before as well, it might mean that people are going to have less cars, because if you have driverless cars, maybe you'll have, be able to do Ubers, where they just come pick you up and you don't need to own a car. There's lots of different things to think about, but we're a long ways away from there. And I tell you, GM and Ford are still selling a lot of cars.
All right, how about
the GM stock?
Right?
That GM stock, Joel, we we got to talk about GM.
Geez.
This has been the most incredible move in GM that I've seen since the stock, obviously, since the bankruptcy, and since the new stock is out there. This is things up from $36 at the beginning of September, $45. You're talking about almost a 20% move here in GM just over a month. This is an incredible move for a stock that, not only that, pays a huge dividend. We're now at 3.38%, but we were well into the 4% range when we were around 36. So you bought this thing down at 35, 36, saying it's a valuation play. You're being rewarded big time here now. Not only getting paid to wait, now you're getting paid to own. $10 here in the last month and a half.
And did Citigroup make a case for 134? I tried to.
What was that note? Was that Spencer? Do we have confirmation that Citigroup, threw out a case so GM could go to that high?
Yeah, remember that? Were you not?
I remember you mentioned it on Friday, but I never saw, the actual. I didn't go hunting for the note, but that's wow.
It was 130. They see a long-term.
They made the case for it. They didn't give a price target.
No, they did. A long-term path for $134 a share.
Holy cow! I know stock's up again. This is just in rocket ship mode here now, and from a valuation perspective, this could continue for a bit. I mean, it's being revalued here right now. It all started with, it was Deutsche Bank note that kickstarted this, wasn't it, Joel?
Yep.
When stock was around $38, $39, and they said, these guys are going to lead the electric car. And they're going to have 22 of these things by whatever date. I think GM said that as well. And since that, it's been straight up. So how do you argue with it? I mean, you're fighting the tape. Plus, the thing's cheap on a value. It's still got a 3.38% dividend. So I don't like chasing stocks. It's not my style here. But I'd be a buyer on pullbacks here on General Motors, just because this thing's now got the sentiment towards it. It's, it's turned. The sentiment's turned towards this. Even Ford has, caught a bit here. Not in the last few days. But
nope.
Up significantly. 1050, the low, not even that, even lower than that. August got down to 1047. Now 12.5, you're talking about 25% move there too.
Yeah, and you got the old
move.
Analyst bandwagon there. Deutsche Bank did it, then Bank America came out on the third. You had General Motors was upgraded by Deutsche Bank. That got things started. But Dennis, the real question is will you have to teach Spencer how to drive?
No, maybe not. Maybe they'll be all driverless cars. They won't even have to know how to drive.
Yeah, right.
A scary thing, your kid driving. There'll be a lot of parents that are happy if their kid don't have to drive when they turn 16.
45, 17.
Learning to drive will be the equivalent of learning to write cursive in school. Everyone says you need to do this when you're older.
Now that's a bold statement.
Learn how to do it now because you'll need it when
real.
you're older. But do I need it when I'm older? No.
Do you know how to write in perfect cursive?
Yes, because I learned because they made me learn when I was like in second grade or something.
I could still do it a little bit. My cursive was always really messy though. I kind of look like chicken scratching.
But they said
I still do it. Even when I'm writing my morning notes, a lot of times I'm writing in cursive.
Will need it when you're older. Do I need it when I'm older? No. No, I don't.
The kids, they don't even teach it nowadays. Do they teach it in school at all now?
I don't. I guess you'll find out in a few years.
Yeah, when my kid gets old enough. I don't think they teach it anymore. Teach typing. I mean, I guess, you don't need, it's an old school thing. Like if everybody's using, their iPads and their iPhone, I guess you don't need it anymore. But I find it weird. Even like, you think about like, they must still teach like long division and stuff though, right?
Yes.
Because you think about it, everybody uses a calculator now. When's the last time you used long division? Like actually wrote out, to figure out, this divided by this is this.
I honestly don't know if I can still do it.
I think I haven't done it probably 20 years. The last time I did it, I think it was on my CFA exam. I had to actually relearn that because CFA don't give you a calculator in that exam. So you got to sit there and you got something to calculate. I think they might even do it now, but I think when I wrote the CFA exam back in 2000, I think they don't give you a calculator. So I actually had to do long division. I can't remember for sure or not. Maybe it was an exam that I did. And I remember I had to relearn long division, or maybe it was when I wrote my GMAT. That was it. When I wrote the GMAT. Did you know I wrote the GMAT?
That was a long time ago.
That was 1999. Yeah, wow. I wrote the GMAT there. So I was going to go, and I actually never did end up going away and getting my master's, but that's what it was. It was when I wrote my GMAT that I had to relearn long division. And I was like, man, I used to pound these things out when I was in grade 6. And now I'm like, I'm slow as hell at doing this long division because I haven't done it in 20 years.
All right. So we're
on a bad tangent here. Let's get us back to stocks. Netflix, $200. It's like right there, right now. Ace is talking about it in the chat. 199.70. We said on the show last week when this got to 193, we're like, this looks like it's going to 200. Well, it's there 2 days later. 199.75. Does it touch 200 today?
Well, if you really want to go out on a lunch on this one, another 24 cents.
I say yes.
All right. Does it close over 200?
I say yes.
I can't. It's too close. It's too much momentum going in that. I'll just give you the pre-market high, 199.90. So right there, last trade 199.76. The price upgrade, 4-day rally. So this could go for another 4 days. I mean, a 4-day rally is nothing. I mean, that's almost like consolidation in this market. So look for continued follow through in Netflix.
Yeah, it's hot, and it's going to report here, I believe. Do we know when Netflix is going to report? They're coming.
Yeah, I think it's next week, but I will confirm the exact date right now.
Yeah, find the exact date. Netflix is coming here, and often you do see these run-ups ahead of the earnings reports. We had the gap and go the last earnings report, but it eventually filled the gap. Joel always talks about gap fills, and if you look at the last report, that was when we gapped up from 163 up, and we got up to 185 that day. Kissed up to 190. Everybody thought 200 then, but they were too early, and then we filled that gap. It took a month and a half, but we ended up just filling that gap. And then we've come all the way back up here now, and now we're looking strong here again. The one concern, obviously, is if you hold it into the report and we continue to run up, is when they have the run-ups into the report, they have to blow it away. If they don't blow it away, that's always a concern. But this thing's got 200 written all over it for today, I think.
Monday after the bell is when they report. And I'm just now looking through their recent earnings history. They've actually only missed their EPS estimate one time in the last 5 years. But anyway,
sometimes that matters. Sometimes it doesn't.
Yep.
Sometimes you could be like Costco and blow it away, and then just get blown away. Like Costco. Talk about that, Joel. That was a report that actually was pretty good. It didn't matter. They decided they hated it for whatever reason. The street turned on it. 170, and then media will always find a fundamental reason, but a lot of it was just the stock had run up, and they're still worried about Amazon coming in the space, and they just decided that was the day to hit it. It was 170 after hours on that report, just for a minute or two. And it pulled back, and then it was like 162 when we were doing our show. Costco got all the way down to $156 on Friday. So giving back basically over half of the run. Even now, you can almost say 2/3 of the run. Really, if you can't consider that it got up to 170 after the report. I mean, it's 150. I might get another shot down there, Joel.
I don't know. 158.75. That was mid-range, and that did nothing to stem the tide. You had a couple lows right at the 157 area. So this is a replay. We'll see what happens. I'm going to wait for it maybe to get back above 159, see if we can hold that. Usually, when you take that long to make a move, you have a 50% retracement. You usually have, at least he stays at that number for a little bit. Talking about it in Barron's, it just says it's too expensive. And also
that's a concern.
Yep. That's the concern. So,
and And here, and I've said this on the show a lot of times, there's always, when a stock goes from being a growth stock to a value stock, there's a big difference because you have people like me and in my investment portfolio, completely different than trading. Like we know, if you just listen to the show for the first time, I have my investment portfolio that I like to buy value stocks in, and then I have my trading portfolio. I trade anything. So it's a completely different, game. But when you have, somebody like me and, Warren Buffett, we look at value investors, we look at PE multiples. We're old school. I actually sit there and crunch numbers even sometimes when I'm trying to figure out what I want to buy in my investment portfolio. I look at Costco and I see an expensive stock still. I've said it that I would like it at the 145, 150, but really when you analyze it, it's got, a higher multiple and it carries that. And if you think Amazon's going to be coming in and killing their growth, then you have, okay, all of a sudden this gap where growth stocks, when growth stocks go to value stocks, it takes time. And that time is usually a correction in price because a growth investor doesn't mind paying 20, 30 times earnings. Value investors don't like doing that. They want to pay the lower teens if they can, when you're looking at it from a multiple perspective. So Costco earnings, do we know the estimates, Spencer? I'll throw you right under the bus here, but go to the Pro. Pro is good like that. Do we know what the estimates are for next year on Costco?
You want the next quarter? Yeah, we
could do that, or next year. It'd be good for the year.
Actually, I don't have them. I don't know what they are. I'd have to go and dig. It may be in there.
In any regard, we can get a roundabout, and you can say the multiple going on the last year's earnings is 25. That's high. There's a retailer that's maybe Amazon's coming into their space. So if you think Costco is cheap just because it's down from 180 to 157, you still got to look at the multiples. And at 25, I like multiples when they're like 13, 14. That's when, the value guy in me starts to get interested. And, you have to analyze if they're, is their earnings going to slow? There's a lot to do. You can't just take any and say, I'm going to buy any stock. It's got a PE at 13. But if the growth is slowing, the PE is 25, it comes in. Ask CMG about that. And, we were preaching that all the way down from 500 to 300, is that the multiple's just too high. Even if, they get, by this equal thing, growth is slowing there, maybe due to that. And when you go from 500 to 300, the PE has come in, but it's still 64 on CMG. Now, those are lower earnings because they had a bad year, but that's a big difference there. When you're going from growth to value, the stock price can come in big time.
One other concern with Costco was slowing memberships, new memberships. So that was something they had banked on with the new store openings and whatnot, increasing membership. So, but we got a good number, and that number is at 50% retracement. Just call it 159. That would be the level we'll be looking at Costco this week. See if
that's resistance now.
Yeah, it is resistance. It came right through it, and they just came in on that one, and it was relentless. Probably had a lot of people too that bought it on that little rally. Okay, we're going to fill that gap up to 180, and you could see how quickly it turned around. All the people were trapped here, and then even a good short off the opening bell.
Yeah, those people are all trapped, and that's something to consider. I think you still got some day traders maybe even trapped there because they don't like to lose money either, and a lot of those guys will hold on. I think Costco has people trapped as well. I think Costco path of least resistance is down, and I think it sees 150 again. So I'm not coming here at 157 on this stock. I think it actually could not see one time. I see that today, but I think it could take out the low today. It takes out 156.54. Next stop's 155. Takes out 155. Next stop's 150.
And that's a triple bottom too there. You had a couple lows in there in July, then you revisited it in August. So longer term, below 152. I don't know where the 200-day comes in. It's probably even higher than that. But you'd have some big long-term holders that under 150, they'd say, hey, I'm out. And that could really hurt the stock. Still have a gap to fill going back all the way to December of last year. And in order to do that gap fill, maybe we'll wait for that. You need to get down to 146.91.
What's the reason? What's going to be the catalyst to drive it higher? I mean, the report was good, and that can drive it higher. There's people out, and then, Amazon's still coming at them. Amazon's already in the space. We got the Whole Foods. We don't know what that's going to happen. There's a lot of unknowns there. The multiple's high. What's the catalyst to really take us higher? That's what I ask myself when, a lot of people are saying, oh, you got to buy Costco when it's down $13. I don't think so. I think the path of least resistance is still lower because I don't see the catalyst to take us higher here.
Streets turned on it as well. Let's see here. 3 out of the past 5 ratings have been downgrades by some big boys.
Analysts.
Yeah.
Chase Price.
Morgan Stanley, BMO, Deutsche Bank. The only one with an upgrade here over the last few months has been Raymond James. And I don't know what he thinks about that now, but looks like there's some more potential downgrades in the issue as well. So if you want to think this going right back up, what's the catalyst? Raise the dividend, but they already did that dividend trick a while ago, right? Did they pay the $5 dividend? Wasn't that a couple years ago?
I think they did a special dividend a while ago. Yeah, I do remember that. They did a special one. I like the special dividends when you get those. Those do help to prop the price up, and I like getting paid. So that's why I like special dividends when I own the stock. But I don't know what the catalyst is here either, Joe. I think we're on the same side here. I think pathways resistance is lower for Costco. Let's talk the other two stocks that were getting Amazoned on Friday with CVS and Walgreens. Ooh. Something that we've talked about on the show here for a bit. Oh, actually, maybe that wasn't. What was Friday's cat? It was a downgrade. That wasn't Amazon. It was a downgrade from Walgreens on Friday, but CVS got her too. But I've been saying it for a while. I think, Amazon's coming for these two companies as well. That's why I don't want to own these stocks, WBA. And if we want to go out and look at multiples on these aren't that cheap here either. I mean, the overall market really isn't that cheap. So, you're 19, 20 times earnings. So I guess Walgreens right in there at an 18 multiple. CVS is sitting at about a 15 multiple. So CVS is getting a little bit cheaper, but maybe a little bit of a discount to the market because I do think Amazon's coming for these guys too.
Bad day, real bad day on Friday for both of these stocks. Walgreens Boots Alliance took out that major support. Yeah, that spike bottom just above 75. So you can't really think about this on the long side until you get back above and hold 75. Let's see how it's trading. Not too much, up a little bit here at 73.20. CVS hit a rock at $84. That made a low of 76.54 in the pre-market trading. Let's look at the daily chart. Ooh. Now, here's a target. If you're going to think that CVS is going to test its low of the move here, folks, 74.59. That was your low on August 24th. Still a little meat on the bone there in order to take out the low of the move.
Let's jump over and just go to the ratings early because there's a lot of interesting ones here today that are moving the market. First, I'm just going to go to this Viacom call from Citigroup here, and you talk about analysts chasing price. Well, this is a bold call here now. You've had a consolidation period in Viacom for about a month and a half. We've been trading between 26 and 28 bucks. Actually, on the lower side, 26.65. We are taking out that low here today, which is concerning big time to me. You can say, oh, well, this is a pure value play, but this is something that growth is slowing in. This is a little bit scary. This could be a value trap is what, it has been. I think it continues to be. It's why I don't own it in my investment portfolio. VIAB down 90 cents here. Citigroup downgrading to sell, putting a price target of 24 bucks on it. It's getting it's down $1 here right now. So it's getting a third of the way there just today, just off the Citigroup call.
I took out the former low of the move, and we would talk about this as far as when a stock makes low and it just can't get away from there. There's a great example right there. You had a 26.65 low back at the beginning of September. Couldn't even get over $28, right? And just the magnet pulling it back down. Let's look at the pre-market trading. Pre-market low, I think I saw is 26.04. You're going to have to go out. Boy, this is as low as this stock has been. Holy mackerel.
You got to go probably back. How far back?
You got to go back to November of 2009 when the stock hit 20.
Financial crisis.
Yep, hit 23.64. So, and Dennis, is that spread? We were talking about that.
It came in a little bit. So it's easy to both. So VIA, I got a locate no problem on it this morning, and everybody was saying, why is VIA going straight up when VIAB was going down? And there was multiple things, and we published an article, and I came on the show, and I told you it became hard to borrow on the street. I don't know why, but the VIA locate became very difficult. Nobody was able to get a locate. You squeeze the people who were basically trading, the VI, doing the arbitrage between the two classes of shares. And VIA ran up $6. And VIAB was actually going down during that time. It was crazy. The spread blew up from 5 points, 14 points or something. It got absolutely insane. These used to be actually very close to each other, but it's come back in quite a bit here. You had to close at 35.40 on VIA, and VIAB closed at 27.15. So it's only about 7.5 points out now. So it's come back in a long ways, but you couldn't hold it through that because there was no locate. So you were probably bought in. So this is what happens when you short stocks that are hard to borrow. Believe it or not, if your broker cannot locate the stock, they will go into your account and buy the stock back. You have no choice. If they can't locate it, it's only 2 day settlement here now. If they can't locate it those 2 days, and if they became hard to borrow during that time, you will get bought in. And I'm assuming there was a lot of buy-ins back then in August, and that's why the stock was running up, probably just as people, and then other people were just scrambling for cover too because it blew out so much. So even though you were right in the long run to say, oh, this is 10 points, it's going to come in, you can't physically hold it because of the locate. So that's market mechanics, understanding when you short stocks that are difficult to borrow, they can become then hard to borrow, and they can become impossible to borrow, impossible to locate. And if that happens, you can get bought in on your stock.
That's happened to you, hasn't it?
Oh, yeah. I used to short stocks all the time. And there's trading strategies behind that, too. I mean, those hard to borrows and buy-ins. I mean, if you can figure out, okay, well, this stock has been easy to borrow for a long time, and all of a sudden it's, hard to borrow. Well, you can kind of predict there's probably going to be some buy-ins out there, and those buy-ins will push the stocks higher. And you can get situations where stocks are really thin. Like Viacom has some liquidity. Even VIA has some liquidity. You can get to some little like penny stocks that trade like only 3-4 times a day. All of a sudden, those get hard to borrow. Those things can rally like 50%, 100% on buy-ins. That can happen. So it's just, you've got to be very cautious when you're shorting stocks that are thin, when you're shorting stocks there isn't a lot of float, and when you're shorting stocks that are difficult to borrow in the first place. Because when the locate can't be found again, and just to understand the mechanics behind it, you have to have somebody else that's willing to lend their shares so you can short a stock. So if all of a sudden you can't find that person to lend, that's, when you get the locate, that's where you're going out, you're trying to find the other person to lend. The broker will do that for you. You can go to outside firms, locate brokers, that will actually go out and, try have bigger inventory to try to find those stocks for you to short as well. But if everybody comes back, and doesn't have a locate, well, all of a sudden, if you're short the stock, it's 2-day settlement, you can't deliver your shares, you get bought in because they got to be able to deliver your shares.
We've seen that. We've seen that before, and hopefully none of our traders will get caught in that kind of situation.
I'm very cautious when I'm shorting stocks now. Before 2007, 2008, it was a little more easy. The rules were, the rules were there, but they weren't enforced as well. And you actually had a lot of naked shorting going on out there. And the brokers had a little more leeway. They don't anymore. They get fined for this, so they don't play games. They go into your account, and they will buy you, and usually you get a warning. I know, like at Interactive Brokers, you get like a 10-minute warning saying this stock, we can't locate it here. You got 10 minutes to cover. It's $3.50. Cover this in the next 10 minutes. You're getting bought in, and you get bought in on the open the next day, no matter what the price. So you get those warnings. There's some strategies behind knowing that information as well. There's trading strategy behind that. People get those warnings. They start buying the stock. It's like
exactly. I was just going to ask you if you like
other people got that warning as well.
Yeah.
So that's the main consideration. There's strategies behind that as well. So when you see those warnings, it's often going to be there's often going to be maybe some upward pressure as people are buying back their stock that can't be located all of a sudden or getting bought in by their broker.
All right. S&P's just hanging out. We missed the high, buy a take 50-50. That's your pre-market high, 50.75. That was your high on Thursday. In shape to make an all-time closing high. That high close on Thursday was 25.50.
Okay, talking the ratings, which we were going to go into, and then we went on the tangent on the locates. So we said Viacom. John, I'll just fly through a few of them. And Spencer, help me out here if you see any other ones that I missed. Johnson & Johnson up at Wells Fargo, price target 49. E-Trade getting upgraded at Bank America. We got Take-Two downgrade at Cowen. We got Symantec SYMC downgrade at Cowen. We got Yelp downgrade at Cantor. We got Morgan Stanley upgraded Credit Suisse. We got Humana HUM downgrade at JP Morgan. We got Disney getting raised to a top pick at RBC. Spencer, is there any other ones that are jumping out on your radar here that I didn't mention?
You jumped around. Did you mention?
So much.
Yeah.
I'm trying to give information as fast as we can. We only have an hour here to give you guys all the information.
I know.
I'm in a fast market here, Spencer. It's a fast
You're
market.
the only one.
That's
Did you mention Kohl's? Because Kohl's.
No, I did not.
Okay, Kohl's. Let me pull it up right there. Kohl's upgraded this morning from who was the firm that upgraded?
Kelsey,
Kohl's?
I thought.
Yes. Kohl's upgraded.
That's his memory. Look at that. My goldfish memory. My 6-second memory is improving.
Kohl's upgraded at Telsey. Did you mention? Gosh, you went all over. Did you mention Viacom? You mentioned Take-Two. You mentioned Yelp. You mentioned Express Scripts.
No.
Express Scripts.
ESR.
Express Scripts downgrade at Raymond James to underperform. You got Humana. You got Citi. Those are the big ones. Morgan.
How was Citi?
Citi downgrade at Stifel.
Oh, Citi was downgraded at?
Yeah.
Really?
Yeah.
It's speeding up.
Citi downgrade at Stifel, buy to hold.
Oh, I don't have that one.
Okay.
On my sheet, so okay. Well, are you sure? Because I'm just challenging because the stock's trading higher. So I just want to make sure that's not.
I mean, yeah, I'm 100% sure.
Not see that. So okay. I'll believe you, but the market doesn't believe you because it's trading higher.
Okay. Well, that's all. That's it, though. Besides those, you got the big ones: E-Trade, Disney, Morgan. Those are the big ones.
Okay, stocks. So, Joel, which one do you want to jump into? We went all over the place here. Want to talk Johnson & J&J?
Sure. And didn't Goldman put that on the you absolutely have to sell list a couple of weeks ago?
They were the ones that downgraded it, yeah.
That was a while ago, and now you got a nice recovery here. Whew, you got a great level to look at and see if it busted through it in the pre-market trading here. We did 134.50. That's your pre-market high. So my strategy would be, my conservative strategy would be, see if this thing can come back down and fill the gap. I don't know if you're going to get to do that in a thin market, but you did have a triple top at the 133.30 area. So if you're shorting, look to bring it in there above that. I think that was the Goldman day that you had a high of what? No, we're through 133.82. The only number I can give you is 134.29. No, I can't give you that because we're trading above that. Boy, oh boy, 135.75. There is a triple top there, 135.50 area. So that's only a buck away. That'd be my target on the upside. And if it went into reverse at all, I'd try and bring it in right near the old triple top at the 133.40 area.
Jump over here to Take-Two stock. That's been a monster performer. I mean, this stock has just been a one-way train forever. $70 4 months ago. It's $107 here now. It's probably a valuation call. I didn't see the Cowen note, but Cowen is downgrading it, and the stock is down $3 on that, so giving back a little bit of the gain. But wow, the stock has been an absolute monster. If you go out even longer than that, just over a year ago, the stock was $40. This is an incredible move here in the last year for TTWO.
What are their big games? I know you guys are going to know this.
It's that
Call of Duty? No, that's
no, the one that everybody plays. I don't play video games. The Grand Theft Auto.
Yeah. Pac-Man?
Yes, Pac-Man.
Grand Theft Auto, Pac-Man. That's where Joel is back in the day. It's Ace will know. Ace is the gamer. He'll know all the other ones too. But Grand Theft Auto is the big one.
All right, well, we'll see. $100. I mean, what a great level if you're looking for a target on the downside. You did have a nice 4-day run, made that all-time high, all-time closing high, and then you had a couple lows going back early last week, 99.90, 99.86, and 100. But we're still $5 away from that. Your 2-day low, if you're looking for a potential support point ahead of that, Thursday's low, 102.29. All right, 8:34 and 45 seconds here. You take a quick break and bring in our guest.
Yep, Jerremy Newsome, CEO of reallifetrading.com. We'll be right back with Jerremy.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elkanah, along with Dennis Dick, Spencer Israel behind the boards, and we are joined by Jerremy Newsome. He's the CEO of reallifetrading.com. He technical analysis. His favorite movie is Forrest Gump, and not only does he do that, he does Brazilian Jiu-Jitsu since he was 16, and he's a stand-up comedian. I mean, you're a busy guy, Jeremy.
It's been a while since I went to a good comedy club, but I need to get back on stage. But yeah, man, I like doing activities. That is absolutely true.
All right, so let's just talk this general market here. I know you're a pretty bullish guy. I think that you're probably enjoying these markets, but different markets, different volatility, different trading strategies. So just, talk about, what's been your focus? Are you still trying to pick on some of the high flyers? What have you done in this low volatility environment?
That's a very good question, man. So I'm being, and I have been, I will be for a very long time, a perma bull, just because over the long run, it's just more financially responsible, especially if you're younger. As the older you get, the more you're interested in cash and risk mitigation and just protecting capital. But over the long period of time, I mean, you gotta focus on bullish plays. And so for me, I'm asking the question: in the next 20 years, what companies do I know are likely going to be around? Meaning, are they making money right now? Are people interested in them? And do I know easily how they make money? The Warren Buffett approach. So the Netflixes of the world. I mean, I just don't see Netflix go anywhere, And that's, I think that's where you guys finally was like, okay, this guy knows what he's talking about. I did the Netflix article, and I sent it over to your guys. And I was just like, I think Netflix is going to increase 55% in the next 3 months or something like that. It's just going to continue. I know you guys were talking about it earlier this morning. And I like your lunch bet. I'll take the lunch bet that it closes over 200 today.
That's an easy one.
If somebody wants to have a pastrami sandwich with me, I think that would be an easy call. The Netflix closes over that price. But it's just a strong mover, man. And the autonomous vehicle with General Motors, that one, I will say that one surprised me a little bit. But I think I always
surprised everyone.
Kind of
I mean,
totally.
That's why the stock's up 20% a month. Dennis, I'm on you. I'm on board with you, man. If that thing pulls back a little bit, I think that's a great buying opportunity because at this point, it's in a very, very rare space that, like you mentioned, hasn't been in since bankruptcy. So I think GM is very nice. Interesting. They're really getting involved in the autonomous vehicle market. They should. I mean, they're massive. They're huge. So I don't know if that answers your question, Joel, but I guess what I'm looking for, man, is companies that I know going forward are going to be around and be viable and be making money. Facebook, dude, oh my gosh, they own WhatsApp and Instagram and Facebook, obviously. So you're talking if you're on the internet or you're texting or you're communicating with somebody. Yeah,
they probably have your information, and so, I mean, you're talking one of the biggest companies in the world right now that doesn't pay dividends and it's pretty lowly priced. I love Facebook also.
I mean, this is the $1 million question. So that's the first question I always ask when I'm doing an investment is, what is going to be around for 20 years? So it's a great first question you're asking. The second question would just be, though, if it's around for 20 years, what about valuation, though? Because when you look at something like a Facebook and a Netflix, the valuation is high. I mean, from a multiple perspective, they don't make, and Facebook, a lot less than a Netflix. But that's always what I struggle with is, I always ask the first question is, do I think it's going to be around 20 years? Second question is, what's the valuation look like? When I look at a company like Viacom, it looks cheap from a valuation. But I don't know what's happening, in the media department in 20 years. So I have to ask that question: is Viacom going to have to, figure out some other way to make money 20 years from now because all the social media is leading their lunch? But what about these companies' valuation? How do you incorporate that in your analysis?
That's a very good question. So valuation for me often comes down to ease of revenue and revenue models. And so I don't look at a massive amount of fundamentals as probably I should look at them more. But in regards to the overall fundamentals, in regards to the valuation of a particular company, I mean, if something is 20, 25x, obviously it's on the high side. But we saw that with Amazon a lot.
Forever.
Forever. And companies like Priceline, things like that. So I mean, there's a point where you go, okay, if this is a behemoth, if this is the company, like if this is the benchmark, if you say social media and you say Facebook, I mean, that is the leader. If you're Google, these are the companies that are going to have high valuations. And I dare not talk about Bitcoin on the show, but I mean, what's happening is I think people's perspective of valuation and also money is starting to change as we get higher and higher and higher, and people start seeing bigger and bigger and bigger numbers. It starts scaring more and more people. Like I said, you see Google at 1,000, Amazon 1,000, Priceline at 2,000. Just these numbers are like, Berkshire Hathaway A-class shares, $250,000. You're looking at these prices that people just scratch their head at, like, who's buying up here? They keep going higher. And obviously everyone's excited about a market retracement, a market pullback, things like that. But to really, really get to your answer of valuation, my overall thought is, how easy is it for consumers to spend money on these products? Like, how quickly will I whip out my credit card or debit card to pay for something that this company is selling? So Netflix, I had a buddy who had, true story, 4 subscriptions, didn't even notice. Like on Netflix. So it's like $9 a month. Like, he bought one when he was in college, and he bought one, I don't know, his girlfriend moved in, they had a different account or something. And so he had 4, and it's like, you don't even notice, And so with Facebook marketing, that is the way to do things now. Like, you're doing reach a giant audience, you're doing it on Instagram, and it's easy. $5? Like, they're getting everyone to spend $5, but they're doing it once. And once you spend $5 once, I mean, the rule of marketing. Once you rip off the credit card one time, they're going to get you a second time. It's going to happen. So that is, I think it's really, really easy to spend money with a lot of these companies, even if it's small increments. If you get 1/10 of the world to spend $5 every month,
that's a lot of money
for a long time.
Yeah, that is
a lot of money. Yeah, a lot of money. And that's what people forget. It's a law of large numbers. It doesn't have to be a lot of money. But if you spend $1, every single person in the world spends $1 once a month. You're doing okay.
Okay, so what about, like, if you're looking at banks, do you kind of just shy? I mean, is that not really a sector you like to focus on? It's been hot. It's been in the news. It's been moving up. So we're really working Jeremy here this morning. But, how do you do that, with banks? What banks are going to be around in 20 years?
Oh man, Joe, you're pulling on my heartstrings. you know I don't like banks, and that's funny. Big banks have always scared me. I do like regional banks. And here's how I value them. And maybe I do too much Warren Buffett approaching when I'm doing investing, but I don't know. He's just always been a fan of mine. And everyone knows everyone about Warren Buffett, everything about Warren Buffett. But his Bank of America play was the only one that I was like, nope, not touching that one. Because I don't like Bank of America as far as like their customer service goes. When I judge banks, it's kind of like a Grant Cardone method, where I go, how is their customer service? How do they treat their customers? And do customers like them? Because if they're going to be around for 20 years, at some point though, you do also have to have good customer service, right? And that's a factor of the whole. Are they going to be around for a while? So Netflix, Amazon, they have really good customer service. And J. Nordstrom, that's a retailer that's been doing pretty well overall throughout this whole kind of retail crash we've been having slightly. And you got to factor that in, the customer service aspect. So I think banks, First Tennessee, I forget their ticker said, First Horizon, I think it is, FHN. They're a Tennessee bank, and I live in Nashville, and they're strong, man. They're a really, really strong bank. Pinnacle Financial Partners, I think it's PNFD, also strong. So I like stronger local banks rather than the big banks. But obviously, you're talking massive banks. I mean, you only have 7 of them. So
that's financial crisis.
The market goes higher. Yeah, they're going to go higher.
The one thing, and this is the main reason, if somebody was to look at my investment portfolio, they'd be like, why don't you have any of the big banks in there? You know why I don't have any of the big banks in there? Because I got burned in the financial crisis. I got burned. I owned Citigroup in the financial crisis.
Yeah.
I owned Bank of America in the financial crisis. Those multiples looked great at 12, and then they were going out of business. So Where are they going to be? So now they don't. Now, when I ask the questions, do I like the multiple? Yes. Do I think they're going to be around 20 years? The banks don't get the check mark because I don't know if there's going to be another financial crisis in 20 years. So
I'm with you,
that's
man.
why I do not put banks in my portfolio because I got burned in it already. But I do like your thoughts. I have some small little regionals. I have some smaller because you're just concerned like the leverage there is a scary thing. I mean, it got really scary.
The leverage is scary.
And I got burned. A lot of other people got burned, and that's why I'm gun shy on the banks for that reason.
You're spot on, man. I mean, the thing is, here's the thing, guys. We all know what's going to happen again. Banks are very optimistic when it comes to money, lending, leverage, right? They know they can make a lot of money. And there's going to be another bank that goes out of business in our lifetime for sure, one of the big ones.
Sure.
And it's just going to happen. So, I mean, yeah, you're absolutely right. I think companies, one of the stocks I'm most bullish on, just hands down, is Square, ticker symbol SQ. They love Square, man. Love everything about that company. Valuation, like I said, right now is a little on the high side, but just a small pullback. I mean, just a nice pullback recently. I mean, that company is ripe to straight up battle Visa, MasterCard, Discover, American Express. It's like it's almost. I mean, they could almost create their own bank in the next 10 years if they really wanted to. Just the way they handle merchant processing, the way they handle online payments, the way they handle being able to set up an entrepreneur on the go, just immediately, hey, let's do this. Here's all you need, one-stop shop. And they keep that customer cycle around for a long time. It's a strong company. And so is Shopify. Even though it had that massive drop, she'll slowly regain consciousness and come back to life. But Square, we were talking about banks. I mean, I think Square will be around for 25 years. So we haven't seen a company like that. I would argue since Visa. You know, I mean, it's kind of revolutionary in what it is and what kind of model it is and what kind of operation they have going for them. I think that's a really very undervalued, under-talked about company overall.
All right. Dr. J's asking about PayPal. Are they going to be around in 20 years?
Oh, yes. PayPal, Joe, for sure. PayPal, I mean, so I went to a place that I can't mention not too long ago with some buddies of mine. And they're like, hey.
Let me guess, Jeremy. Let me guess where you went with your buddies. Spencer, do you want to guess? Dennis? Chet? Does anybody want to guess where Jeremy went with his friends? We won't make them. Where he uses Square. Yeah, if I would have known that. Let me know when you go again, Jeremy. I'm going to buy calls. Buy me 1,031 calls in Square.
All I'm saying is I needed some cash at one spot. You know, like me and my buddies need to make a transaction. So they said, hey, Venmo me. I'm like, what is Venmo? Like, I was just going to PayPal you. They're like, no, it's Venmo. And I was like, oh, man, PayPal's in trouble. Starting to find out, they own them, right? PayPal owns Venmo. So if you're doing peer-to-peer money transfer, they're probably going to start buying Bitcoin exchanges or cryptocurrency exchanges. I could easily see that happening because that's going to be a form of method of payment. And plus, I mean, Elon Musk had something to do with PayPal, right? Just a little bit. So whatever he touches goes higher. He's a genius. He's the Steve Jobs, Thomas Edison of 2017. And I would say PayPal unquestionably goes higher. Long-term, 20 years, they will certainly be around. No question.
Jeremy, let's just jump over here. I want to take it back to retail because you mentioned a couple of the retail stocks there, and you mentioned JWN and Kohl's. I mean, this is the one sector that has, lagged big time here against the overall market. We've had a little reprieve in the last month or so, but I mean, these stocks have just been annihilated. Like you look at like an L Brands, it's had a great month. But when you put it in perspective, LB was a $90 stock 2 years ago. It's now $42. I mean, this is a sector that, if it's Amazon eating the lunch or if it's people not going to malls, there's a lot of reasons why maybe these things have come right in. But what do you think is in store here 20 years from now for a lot of these retailers?
Ooh, in store. I like that. Good pun, Dennis. What is in store for these retailers? I don't think people. That's the thing. People are not in stores. They need to focus on a different model. So the retail space, well, I was mentioning customer service earlier. They're still very bad at that. They haven't figured that part out yet. That's why Sears is going to go bankrupt here. I mean, within the next 5 years. I said that 3 years ago, so I still got 2 years left. But Sears is going to go underwater soon. JCPenney is going to go underwater soon. Dillard is going to go underwater soon. American Eagle, Aeropostale, Fossil, just going down the list. All these mall stores. And I think malls, they were the heart front of retail for a while. I mean, I'll ask you this. So Dennis, personal question. When's the last time you went into a Kohl's standalone building to buy something?
Well, Kohl's is one that I have one before. I'm not a big shopper.
I'm with you, Dennis.
I'm one of these that my wife out goes and buys the clothes for me and then brings them in, and if they don't fit, then she returns them because I never get new clothes.
Yeah.
So I'm one of those that don't go in any stores at all. So maybe not a good question.
Right. Well, which is okay though, because I mean the sentiment is the same as like people in a way like personal shops for us. People would rather just not go. And I say people, a lot of guys, but just people in general just don't want to go into stores sometimes. I think the whole mall industry is changing massively. And I don't know exactly what that looks like, of course. I really wish I did. But it's going to have to be something more entertainment focused. Like they have to partner with movie theaters or food vendors or something where you come in and you buy XYZ and you get so the mall has to become a more of an experience-based platform to get people to go. Have some drinks, go bowling. Here's your bowling shirt, and then it's sponsored by Kohl's, and it's 20% off your bowling if you buy it. Whatever it is, like it has to be something a little different than what they're doing right now, because clothes with H&M and these other online companies are getting cheaper and cheaper and cheaper. The product, the quality is still staying relatively the same. And people just don't go out and interact with people anymore to go shopping. It's all like an online experience. So they either have to amp up their online presence and make it fresher, better, more cool, or the in-person focus has to be more of, okay, we're going to increase our profit margins by just having really expensive clothes, but an amazing experience. And we're not going to focus on the 20-year-olds. We're going to focus on the 45-year-olds plus who hate shopping but want to come here because it's an experience. And that's the only thing I could possibly think of retail. Otherwise, it's just a huge question mark. I think it's going to be scattered by online boutique stores.
Jeremy, I wanted to ask you real quick about Walmart. I don't know if you saw this headline today that Walmart is offering a 25% discount or $25 discount, for anyone who buys a Google Home product through their online Walmart account. I'm wondering if you got a reaction to that.
Smart. I think that's smart. Good job, Walmart. Awesome job buying Jet.com because that was going to be a quick competitor to Amazon. Walmart knows what they're doing. I mean, if Walmart financially was a company, they'd be, if Walmart was a country, I think they'd be like the 32nd biggest country in the world, something insane like that, with Apple and ExxonMobil up there. Walmart's massive. They're going to be a while before they go somewhere because they have a really strong niche in just a consumer discretionary product field. But I love that offer. I think it's a great idea. People are going to do it. Walmart has always kind of been the reason that Apple was so popular, I feel like, because Walmart doesn't do a lot of Apple products. Apple products are more in other stores, and other products are more into Walmart. So it's kind of like you have this dichotomy of who goes there and who shops there. But Walmart and other retailers need to do stuff like that. They need to create those niches of people. They're like, yeah, I want to be in there. So, for example, if Walmart is like, all right, today, if you are a military, if you're a veteran of any field, of any armed services, come in, you're going to get a free cup of coffee, a box of donuts by Krispy Kreme, and whatever your favorite shirt, 20% off, whatever that is. And they'll just have these rushes, these days where they just cater to people. They need to do that more. Hey, if you're in college, get in here. Here's a new backpack and a mini fridge, for $100, whatever. And so you create these, like I said, these experiences for certain people, and you just drive people back into it. Now, obviously, it's going to take marketing. It's going to cost a lot of money to do that. But if you get people interested, like, oh, Walmart's the place to go for me because X, Y, Z, oh, man, that's strong. And so, yeah, I think it's a great play. And Walmart will slowly creep back up into the 80s, I believe. I don't know how viable they are getting back into the triple digits, or not to say back into, but getting into the triple digits. But longer term with that Jet.com acquisition, that was strong. That was key for them. So I do think they'll be able to continue higher.
Jerremy Newsome, CEO of reallifetrading.com. Didn't even get to your stock picks here because I started out with that long-term question. And Jerremy, you did a great job handling it. My wife's bugging me for a trip to Nashville soon. So we'll be in for a visit, Jerremy. Thank you so much. It was great having you on.
Yes. Yes, likewise, gentlemen. You three having a fantastic Monday. Enjoy your week. You're awesome, and have a great day.
All right.
Thanks, Jeremy.
All right. We really kept him on there, Dennis, but boy,
it's fun.
He is. And, he has his strategies, and here he is, a shorter term trader, but he keeps that different hat on, that longer term time horizon. So it's great. We're going to get Jeremy back on again real soon. We have less than 3 minutes to go here, Dennis. Are there any imbalances here on this Columbus Day session?
You know what? There's some individual action. Let's go take a look here. So if I'm just looking what's jumping out, what's interesting? GE is a buy and bounce of 198,000 shares. That's going to change because this stock has been down all morning here. There was something happened Friday, and I actually now I have the goldfish memory going. Friday night they were saying some type of structure. There was a change in management here happening. Spencer, maybe you can go hunt down the details. I already forget.
Wasn't it just out left early? Was that it? Was there more than that? That's what I thought. Is there anything else,
Spencer? I'm trying to remember what it was. Friday night.
Friday night?
There's some happened Friday night. I did see it go by on the ticker.
They had a bunch of execs leaving. The CFO is leaving or has left.
Execs abandoning the ship here. So GE down 25 cents in the pre-market, down 1%. It's been down all morning. I still own this in my investment portfolio. Chart is ugly. I try to wear, my trading hat says sell the hell out of this. My investing hat says, well, it's got a 4% dividend and they're going to figure it out. And then I think about, Deutsche Bank says they're going to cut the dividend eventually. So I'm torn. I've had GE for so long. Like I said, I've had it for like 17 years in my investment portfolio. I don't know if they're going to ever figure it out. It might be one I need to revalue and maybe get rid of out of there. So I don't like it, though. From a trading perspective there, the chart looks very heavy here to me.
Yeah.
I think it takes out 24. I think it's in a world of hurt. There I am talking against my book again. I'm the only guy that talks against my book.
Any other, besides GE, any other imbalances?
Pfizer, 71,000 to sell. Merck, 56,000 to buy. That's going the opposite direction. Financials catching a bit. Citigroup, 50,000 to buy here. Procter & Gamble, or JP Morgan, 10,000 to buy. Bank of America, 28,000 to buy. Procter & Gamble, 40,000 to buy. I'm just trying to jump through and see if there's any other big ones from the S&P. Macy's, look at Macy's, 75,000 to buy. We just dogged the retail sector, but Macy's got a buy and bounce this one, although chart doesn't look that pretty on that one either. ExxonMobil, Chevron, both small sell and balances, 38,000 and 25,000 to sell. Gold is hot. Barrick Gold, 30,000 to buy. Gold's trading up, although it's given some of the gains back here this morning, but that's about it. They're all pretty small here. I mean, we are on a Columbus Day. We're early here. Institutions are maybe sitting on their hands this early.
All right, that is it for our show today, folks. Excuse me. So I hope you enjoyed. All the stocks we discussed. Hope you got your questions answered. You can always listen to the show again on our podcast on iTunes, SoundCloud, and Stitcher, or by going to youtube.com/BenzingaTV to rewatch the show there. Don't forget to like us on Facebook as well. Pre-Market Prep. You can like Benzinga on Twitter, like Joel on Twitter, or follow Joel on Twitter. I guess is at Spoos, and then Dennis's Triple D Twitter. Don't forget about Benzinga Pro. You can get a free 2-week trial of Benzinga Pro. It's Benzinga's real-time news platform by going to pro.benzinga.com. You can also email me, Spencer Israel at benzinga.com, if you want to learn more about any offers or get a demo of the product. So that's it for us today. Everyone have a good rest of your day. We'll be back with you folks on Tuesday.